If you are not getting educated about current market conditions, whether you're in title, mortgage, finance, or obviously real estate, you're doing yourself and your client base a disservice. This is the Knowledge Brokers Podcast. I'm Tom Toole with my partner here, Byron Lazine, and we have a special guest this week, the baddest bitch in real estate, Lisa Chinatti. And we've got a lot to talk about. As funny as we're being here, Lisa knows her stuff. We're grateful to have her on. And Byron and Lisa, 7% mortgage rates. That's the biggest topic we're seeing right now. How are you guys dealing with this with your teams? What are you saying to consumers? And what's the messaging we're putting out there to show that we're here to help people, not just sell another house?
I have something to kick off the 7% conversation. It's obviously the biggest news in real estate for the week, and we're all going to share some scripting, really just some information that you need to be delivering to your clients to win in a 7% environment. And I'm thankful for all the feedback we got from last week's episode. Thank you. I'm happy to see that the Knowledge Brokers podcast is working for you and your business. So hit the thumbs up. I really, really appreciate you guys and all of the feedback. And we wanted Lisa to join us. And Lisa, we want you to be here maybe even more consistently than your schedule will allow. We want you to be on Knowledge Brokers. Maybe at the end of this episode, everybody can chime in and let us know if they want Lisa to continue. But the three of us are accountability partners, so it only makes sense for you to be here. We have a text chain called the Three Families. We're like gangsters when it comes to really digging deep into our businesses and how to get better. And so we want to share some of those internal conversations with all of you here on Knowledge Broker Podcast every single week. I have something I want to read to kick off this 7% environment, this ever-changing housing market. This is from Amir Karanji. He's the CEO of Real Deal, who just celebrated 20 years. Congrats to you guys over there. He tweeted out just yesterday, as the legendary Bob Knackel, who's a New York City big-time investor, always says, if you are in the business of real estate, you are not in the business of bricks and mortar, but in the business of information. Those who have the information have the edge. That's what this pod is all about, and that's what going into a 7% environment is all about. Do you have the information, and can you relay it in an understandable fashion for the people who have the fear of what's ahead of them right now in the spring market? Lisa, with the biggest news being 7%, how are you guys thinking about it? I hear your office is on fire over there because I can hear them in the background. Paz is screaming at people. What are you guys thinking about in this environment?
I actually, I was having this conversation with one of my staff members this morning who's in the process of buying a home. And he said, am I making a mistake buying right now? And my comment back was, it's actually a huge opportunity. So think back a couple of weeks ago, we all remember when rates hit 5.9 for like a couple of hours on one day, right?
One day.
Yeah.
Right.
And
Yes.
how many people were in a position to take advantage of that? Not many, right? Because you either had to have had an offer accepted very recently, accepted that day, or in a position where you were in prime time to refinance. And where a lot of people are pulling back, I think one of the opportunities that we have to speak to is that I think over the next few months, we're going to see some of that volatility continue, right? And we have to put our clients in a position to capitalize on it. If they've already completed the purchase, they're going to be in a position to refinance down much sooner and still capitalize on some of the lower purchase rates when some consumers are taking a step back right now. So it's being able to think a little bit creatively and come up with the solutions that are going to allow consumers to act on the opportunities when they strike.
Refinance, rule of thumb, Lisa, correct me if I'm wrong. Typically, people will say it makes sense to refinance when there's a gap of 2%. If we're at 7, we need it to go down to 5 to make it reasonable to refinance. But I know you're thinking about it differently, and you're educating clients on something where it might make sense to, refinance maybe at 1%. Explain what some of the things that you're working on.
Well, so I think first it's under working with the right lending partners, right? We've gotten one of our primary lenders to agree to a free refi within the next 24 months. So as soon as the consumer wants to act upon that rate drop, they're guaranteed at least one free refinance from start to finish throughout the process, which gives the consumers a little bit of security with knowing that it might make sense to refinance at 1% down, right? And being able to understand where those drops are going to happen. More importantly, it's kind of looking at it. And my personal take, and this ties into a lot of what's going on with inventory, I think we're going to see consumers staying in their homes longer than ever before. And so, where it used to be a 2% drop is what was needed based upon the average length of ownership, I think we're going to see that that's going to stretch out over the next 3, 5, 7, maybe even 10 years as the the impact of those 2 and 3% mortgages comes to really be felt across the industry.
Lisa, that's a great point about length of time in the home. We've already seen that extend. It used to be the average was like 7 years about 10, 15 years ago. And now it's jumped up to almost 11 years is the average time in the home. And what we're seeing right now is that 35% of people are living in their homes 10 to 15 years. And that number is going to skyrocket because moving sucks, number one. Secondly, you have that 60 plus percent of people that have the 4 or the 3 handle in their mortgage rate. And Byron, you said 2%. I've always thought it's 1% is kind of and that's kind of the rule of thumb that a lot of people look at. I'm not saying you're wrong. I'm just saying that's what the other advice that you get. And to me, the having the knowledge of like, hey, here's a 2-1 buy down program, and as homes sit on the market longer, seller assist is a more likely term you can negotiate. And for if you don't know what the 2-1 buy down is, it's basically you buy down the rate of the loan for the first 2 years, and it's 1%. It's 2% the first year, 1% the second year, and then it goes up to the existing rate. So it's 7.65. Let's call it 5% the first year, 6% the second year, then it goes to 7. Well, you've just bought yourself some time, and the prevailing thought is rates are going to come down later in the year. Who knows? People have been talking about this, and we don't know how it's going to happen. But you buy yourself some time, you secure a property, you build equity, and you build wealth, because we know that owning a home is the key to wealth building in the country. And this is the message that every professional needs to be talking about right now. How do you build wealth? How do you build your net worth long term? And here's a way to get in and survive the short term pain of the 7% rate. And that's what knowledge brokers are going to do.
And it's 40x the homeowner more wealthy than the renter. So if you're talking to somebody who's been renting for a long time, waiting for those foreclosures, delinquencies, by the way, are lower than this time last year. They're going the opposite direction than you would think in a challenging market. So those waiting for foreclosures are going to be waiting for a long time. Even if they started, you're not going to see those get into the market until mid 24 at the very earliest. And I don't see that happening. So Lisa is saying that having the information of what your lender partner can do to make 7% or a refinance in this market a reality, one free refi, that is a piece of information, right? That is a script that her and her agents are using. And I hate using the word script because, like Amir said in the tweet that I read, this is bringing the information, having the edge, as opposed to just working with the lender that maybe is sitting in your office, or maybe the lender who is buying you drinks. The knowledge broker is talking to multiple lenders right now in the market and seeing who is savage about providing the best experience for home shoppers and giving them the best number. Okay, not this is my friend and I want them to earn a commission. It's these are the 2 or 3 lenders in the market right now that are providing opportunities for you to go out there and get your home that you've been looking for with less competition, because when the rates go up to 7%, there's going to be less competition on these homes, and still be able to execute this within your budget, within your finances.
Well said.
Absolutely. Yep.
Here's the numbers, because this is, if you're just going off of, if you're not getting creative, like Lisa is talking about, where you're working with your lender partner and actually coming up with solutions for people to save some money. Here are the numbers, and you should know these numbers. Right now we're sitting at 7.1%. We'll see where it changes today. It could be 7%, but 7.1%, which was Thursday, on a $500,000 mortgage was $3,360. Okay, that's your mortgage. At 5.99, which Lisa mentioned, we touched for one day earlier in February, you were under 3,000. You were at $2,995. So that's a $400 swing from 3 weeks ago on a $500,000 house. $400 is meaningful month over month, right? And so if you're coming up with solutions to bring that number down, back down to where it was at 599 for your buyer, it's going to be very meaningful in this market.
Well, and I think that the clear point here is that there are solutions, and it's not just, hey, who's got the best rate? It's how do I get through the next 12, 24 months? The free refi solution that Lisa's lender's talking about, that's bringing value to the marketplace. And a lot of lenders, what I've seen is there's lenders that are out there right now. We were talking about this offline yesterday. They're willing to eat the appraisal gap. They're willing to come up with solutions that cost them money to better serve the consumer. A free refi, that's costing them money. I don't care what anyone says, but they're bringing that to win the business now and to win the relationship with the consumer that ultimately is going to benefit them long term. And that's the approach you've got to have in a 7% climate. It's going to be harder to do deals across the board. It's harder to win title, harder to win mortgage, harder to win the sale. But if you bring that and you're willing to take a haircut, when the market does turn, you're going to reap that reward tremendously, get more reviews, more referrals. It's about providing solutions now that are going to work and getting people through this because it's not going to last forever. You can't run and hide. You can't seek shelter. You got to attack here and play offense like we talked about last week, Byron.
That's right.
This is when massive businesses will be built, though, right? Because this is the stuff that separates the traditional agent from those that are going to absolutely win in this market across the board and build businesses that are going to continue to not just like hit sales numbers, but exceed sales numbers. This is some of the biggest opportunity
and we've lost Lisa
in years.
No, we still have her.
We lost you.
I can hear. We lost you, Tom.
Oh no.
Tom, you're over there. Look at you. You got your bananas. You're in Tom Ferry's office, and you're the one that's lost. I got Lisa. Go ahead. Finish your point, Lisa.
I don't know that it's gone. Well, we're building legacies that Tom Toole's going to miss out on. Hashtag chopped liver again.
Chopped liver, Tom Toole. We'll get Tom back here. I want to make a point about another piece of information that I'd be sharing with home buyers. Maybe you don't have a creative solution and the 7% is what it is. Let's go with that scenario for a second. It's going to be 7% for them. And maybe refi is not an option. Let's just take that off of the table. What I'd be telling my buyers right now is, yeah, it is going to be likely that you're going to get a cheaper opportunity later in the year. If we just look at what Fannie Mae is saying, if we look at what Mortgage Banker Association is saying, where, okay, interest rates should go back down to a 5 handle before the end of the year. Okay, great. And maybe we're going to see price pressure and there'll be more opportunities later in the year. It does not mean you should take, Mr. Buyer, Mrs. Buyer, a vacation from home shopping right now. Because right now at 7%, there are going to be others like you are thinking who withdraw from the market. And if you withdraw from the market, you might miss your opportunity to get a deal at 11% lower than what the asking price is. And 11% and 1% on a mortgage rate equal the same thing. So if we're shopping right now and we find the floor plan that suits your needs in the perfect location, and we can get it at the number that works for you, then wouldn't that make sense to move forward and buy the deal today? Secondly, are you not going to be the most educated home shopper in 2023 if we continue to go out there and look at the market? And thirdly, because I know what agents are thinking right now, Lisa, agents are thinking, well, I'm going to be going out and doing all these showings. Yeah, and I know what happens when I'm out there in the market doing a whole bunch of showings. It breeds more business. Have you ever been at a house and shown the house, and as you're getting ready to leave, somebody pulls into the driveway and says, "Oh my gosh, are you an agent? Are you? I'm driving by. I was thinking about this house and I'd love to get in. Could you show it to me?" And you end up meeting somebody in the driveway because you're not in your bedroom in your sweatpants. You're in the game. You're on the field. You're in the arena making moves. You will naturally, being out there showing buyers property, generate more business for you. And oh, by the way, when you get the call this weekend, and the home shopper says to you, "Hey, I'm thinking about 123 Main Street." Yeah, I showed it Thursday. I also showed it Tuesday. Here's what I know about the house. I'm an expert on the inventory in this market. And here's all the things I love about it. Here's all the things I don't love about it. Tell me exactly what you're looking for. Because I've also shown 14 other homes in the area in the last 7 days alone. That's the knowledge broker. That's the separator.
100%. People always want to work with agents that are busy, right? Nobody wants to work with the agent who isn't active in the market, who doesn't know the stats, who isn't 110% aware of the trends. And I think one of the things that we're seeing up here in Boston is multiple offers are back, right? We're seeing things selling for way over asking again. And going to be just as important this year that agents are staying in tune with how far things are selling over asking and what are the unique factors of each house that are contributing to why homes are selling. And just as much as homes are still getting multiple offers, we're still seeing some sit on market. And being able to really understand the difference is critical.
And when you're out there, Lisa, and Tom, will let you jump back in here now that you're back. When you're out there in the game, you have the edge that I talked about from Amir's tweet. Those who have the information have the edge. You know what's going to be going on in that neighborhood. You know what all the inventory looks like. You get a feel for how much real activity is going out there. It's hard to do that from your bedroom, from your home office. And I'm sorry if you're comfortable there. Maybe you're listening to this pod right now from that room. The more you get out there this weekend, the more you get out into your market, the more of an edge you're going to have. Tom, to finish off the 7%, what do you want to add to that?
Well, you said something really important here, and this is no different than what we went through in 2020. You're talking about staying in your bedroom and not being out there. You've got to you're going to hear me talk a lot about playing offense in the current marketplace. You got to suit up, boot up, be ready to go, and be ready to do business. And when you know about these homes, to your point, that's going to attract more people. And it's the more you know, the more you're out there. Activity always breeds activity. How many times have both of you make a bunch of phone calls and then something falls out of the blue onto your desk? It's not because of that you got lucky. It's because you were out there making things happen, and it's the universe thanking you. And there's no data that backs this up, but it happens over and over again in businesses like real estate, like mortgage, everywhere else. And the more solutions you provide, you're watching this podcast, you're listening, you're getting value here, you're talking to your lender. You've got to have so many options and so many tools in your tool belt that when the opportunity does come up, because people will transact, there's going to be 4 million sales this year. That's the projection. That's plenty for everybody. You've got to know the play to get them into home, the play to get them to sell their property, and you've got to be so informed that I got this one. I know this situation. Here's a solution for you. That's the people that will take market share. You never get market share back once you lose it. That's happened in history of every business. This is the time to take market share and make the land grab. And you've got to be preparing the skills behind the scenes, putting in the work, and then, to your point, Byron, getting in the arena and getting out in the field where you can do business. You're not selling houses sitting in your bedroom in your sweatpants.
There's a different energy in the field, right? There's a different energy in the arena. And, you guys have been beating me up this last week about, make some of these calls that are going to grow, your business in a different way, right? And so we always talk about making the calls from an agent level, and we're trying to grow different divisions in our businesses, and create more opportunities for our agents, and whether that's lead pillars or agent growth opportunities or what have you. And when you are out there in the arena on the field, like yesterday, I'm making some calls based off of your guys' strong recommendations. I'm making calls in the car as I'm traveling to an event. The energy is different when you're out there, when you're moving around and you're making calls in between appointments. It just feels like you're on this momentum, on fire all day long. And sometimes you just need a Lisa Chinatti karate chop to the throat. Luckily, those are virtual through text message to get it going.
Well, to your point yesterday, I mean, I'm out of the office here, and I'm waiting for to meet someone. I went out and I made 4 phone calls in the 10 minutes I had. I mean, that's like that extra couple of minutes you take. It works every single time. And look, driving around listening to Howard Stern or sports talk radio isn't going to cut it right now. You have that time in the car. Make those minutes matter. That's one of the key hacks to productivity is taking the time you have and expanding it, because a lot of people will going to this appointment. I don't know if they're going to buy something. Let me just listen to some, music or whatever I'm going to do. Well, you can be productive in that time, and that's what it takes in a 7% climate.
And I'm always talking about like hooks for, your social media content, right? And how to deliver a good hook on video or whatever. A great hook when you're on the car is I'm heading over to 123 Main Street, just came on the market, was thinking about you. Didn't know if you wanted me to send you this other house I just got out of. Man, this person's like, wow, Byron's out there showing a ton of homes. I've been looking on and off, and now they've seen something and they're going to send it to me, right? You're telling them, hey, I'm bouncing from house to house to house, showing them I know the inventory better than anybody. I can text you this information over, and I've been inside of it. I know about it. That brings an edge to the information that you're providing.
Totally.
Tom, go ahead, Lisa.
Oh, I was going to say, segueing into one of the, I think with making your calls, one of the things that kind of jumps out for me is more of our calls should be focused on sellers to solve some of the inventory issue. So I was going to say it was a great segue
into
inventory. And kind of, thinking about one of the things that we're seeing, and it ties into the rates, ironically, both the calls and the rates, right, is thinking about the demographics that are having the biggest pain and willing to live through the pain of the rates. And I've been preaching in my office for the past couple of weeks, baby boomers being one, but I think the one that we're starting to put a little bit more focus on are condo owners, and understanding that it's easier. Those folks are going to feel the pain of their space before those in a single family feel the pain of their space, by virtue of not being able to put on additions, potentially not finishing basements, not finishing attics. And so understanding inventory here, I think I shared earlier, in Mass is down 34% from last year.
And so I agree. And it's even, yeah, it's huge. That's a huge number. I agree with you on the condos. They're going to feel the pain, especially if they have a growing family or something like that. The point you made about boomers, can you elaborate?
Yeah, well, so that's been where one of my focuses has been, because thinking through up here in New England, right, we've been just brainstorming where does it make sense, and looking at move patterns, the United Vans move patterns and all of that stuff. We know that older folks in Massachusetts, I mean, you don't want to live here because of the weather, right? Like we're about to get another foot of snow tomorrow. Often have very, very high equity, if not 100% equity in their homes. And so selling in mass and moving to Florida, moving to the Carolinas where they can pay cash for a home, be a little bit immune to those high rates and still put money into their savings is one of the opportunities that we've been capitalizing on, and might apply for a lot of people in different areas of the country as well.
So what you're saying is to create inventory in the market, you want to try to untap the boomers rather, who are relocating out of state because they don't have that struggle of finding inventory in state. And so I think there's a next level to this. I agree with you. I think there's even a deeper conversation here and some marketing that, especially if you're in one of those migration out states right now where people are going to, Sunbelt states for retirement.
Mm.
If you look up data on Florida, for example, right now, certainly Texas or even parts of the Carolinas, there is an inventory increase in some pockets of those markets right now where you said inventory is down. Okay. So if you want to get near peak pricing in a market like Massachusetts or, really anywhere, across the country, because today we're going to be closer to peak pricing than we are going to be tomorrow, meaning the end of the year. Okay. If you want to get near peak pricing, you can sell now and inventory is rising in those retirement communities. You can be more competitive in that market by taking your equity here and going and shifting it down into that market. There's a and by the way, if you still, some boomers are going to be like, well, I want a summer place in that market that I'm selling from. Great. You're in a great position to go buy now, get yourself settled in your retirement home, spend 6 months, spend 9 months. And I promise you, in 6 to 9 months, you're going to get a better deal up here. I can keep sending you information. And as interest rates come down and as inventory hopefully goes up and price pressure continues, you might be able to pick up that second home up here. Go establish residency in Florida. And this is the type of, especially if you're a luxury agent or trying to tap into that luxury price point, this is content. These are conversations. This is a study you could put together fairly easily by taking an hour, 2 hours on the weekend, doing a little bit of research and getting that information out there to boomers who are thinking about making this move.
The
And
population
boomers,
groups are.
go ahead,
Go
Tom.
ahead. To me, the
No, I
population
didn't know
group.
if you were with us.
I'm good. Tom paid his internet
Okay.
bill down here. We're okay.
Yeah,
So
I don't think he did. Tell TF to make his calls to his internet provider.
yes, we will clip that one out. That's the next social media piece. To me, you're absolutely right about condo owners. I love, because those people are feeling the pain. Boomers, they're a little more insulated, especially if they're moving out of state. And what this really demonstrates to me is that population groups historically do move at certain times. This has always been the case in the real estate market. There just happened to be an influx of all these people moving because of the millennial generation. It's more than baby boomers at their peak, and they're creating all this demand. The boomers are the key here. I cannot stress this. Now, we talked about this previously, Byron, that those are the people that when they decide to sell, that's the homes most folks want, and that's where the competition's going to be. And if you want to cash out high and you're a baby boomer, Q1, there's a month left. Q2, there's going to be more inventory. I get nervous for what happens later in the year, because as these rates keep pressing up, inventory is going to continue to go up. This is, you said it last week, last call, right? This is the chance that everyone's been waiting for. And a lot of these people aren't getting the right information. They're not getting all this data and understanding where the market's going. And sellers are typically the last ones to find out that the market's turned. And it's almost everyone's obligation who's listening to this podcast. You've got to get the word out with this, because some of them don't know because they're not in that decision-making phase yet, and they're going to be disappointed someone didn't tell them to help them cash out on their asset.
Yeah, and listen, which demographic is the most insulated from today's economic conditions, from today's 7% interest rates? Boomers are the most insulated. They control 1/7 of the world's wealth. Okay, 74 million people control 1/7 of the world's wealth. So if you want to start creating relationships in 2023 that aren't going to bring up the struggle of the economy, it's creating relationships with your baby boomer community in your market, which means if you're a young agent, if you're on the come up, don't go out on Saturday night at the club that closes at 2 a.m. You're not going to meet many boomers there. Go out on Sunday morning to if you got a Ritz in your market, go to the brunch at the Ritz. You'll see a whole bunch of them there getting their free newspaper, their muffins and their bananas like Tom's eating over there today.
I got two bananas. There's actually a phone.
Lisa, I want to go back to the condo owners, because I think that's a really, listen, condo owners are going to have pressure on their HOAs right now too, because we all know how hard it is and how expensive it is, to get consistent contractor agreements. I just came out of, I'm in an HOA in Florida, but I just sold my property. It was in an HOA in Connecticut, moved into a different property there. And these HOA groups, particularly in Connecticut, they're like changing contracts out every year, always looking for a lower landscaping bid, always looking for, a better snow plowing bid or trash or whatever, because it's very hard to keep the HOA cost down when you're dealing with these contracts. And so that's going to be a pain point that you might reach out to them with marketing or with data and saying, hey, sick of HOAs going up. Is your walls aren't growing and you're unable to, like Lisa said, put that addition on. Here are the opportunities in the market, right? And so I love your point about condos. It's something that I haven't even thought that deeply about, but I would agree that's a huge opportunity.
Yeah, I think there's massive opportunity there on a whole bunch of levels, right? And it fits across the country, and no matter what market you're in, the subtleties of owning in a condo aren't going to change anywhere. And I think that there's going to be a lot of ways to look at the data around those and kind of start to pinpoint those that are likely to sell.
Hey, thanks for checking out Knowledge Brokers Podcast. If you want to start implementing some of the things that we're talking about on this podcast, having the edge of information, being able to talk to more people, being able to deliver this information to more consumers in your marketplace, you're going to need time. Everybody needs time. How do you get your time back? You outsource the things that are slowing you down, whether that's uploading a listing into the MLS or doing the transaction details, all the paperwork back and forth, or that marketing checklist that you're handling every single day. What do we do in both of my businesses, whether it's BAM or my real estate company? It's 687 transactions in 2022. We use virtual assistants. That's how we scale up. We have virtual assistants in every single segment of our business. Tom and Lisa, who you're hearing from on this podcast today, they use virtual assistants. Who do we use? We use VirtueDesk. The link is down below. You can get $250 off of your startup fee with VirtueDesk. Do not grow your business without having virtual assistants this year in 2023. Use the link below for VirtueDesk, $250 off your startup fee. Let's go. Let's get our time back and be that knowledge broker.
Well, you think about the pain points people move with, right? I mean, a condo's great until you don't have a condo lifestyle anymore, and it's very finite. And pain points are what cause people to move. I just was talking with Tom Ferry about this. It's the 7 Ds, right? Like death, divorce, diapers, diamonds, all those things. When you don't have enough space and you've got kids, we've all got kids here, the kids don't get any smaller. They only get bigger. And a lot of people people bought condos. That's all they could get the past couple of years because of what was going on in the market. They're going to outgrow those properties quicker. So while I do agree length in home ownership is going to increase, condos have typically been that couple year sort of move. And one of the most Googled search terms at the beginning of the year was selling your home after 2 years. I'd be looking at condo owners who bought their first property in 2020. And that's going to be a very dynamic part of the market because they might be sick of it. Maybe they don't have the outdoor space or they just don't have storage space or all these. And you get more stuff. You don't get less when you're in that, when you're getting older, growing your family. So that's a massive opportunity, Lisa. I mean, that's really, really smart. And I think everyone needs to be paying attention to that no matter what market you're in. So did you guys see what Sam Zell said about the Fed as we keep talking about rates here? Did you see this
yeah,
comment?
I think we should close out this show with what's happening with the Fed. And there's going to be 2 or 3 weeks of just constant headlines about what the Fed's talking about as it leads up to the next meeting. So break down what Sam Zell, real estate billionaire, said just this week.
So I'm going to be pretty clear. When you spread out free money for years at a time, you create significant drag. And I just don't see how we're going to avoid a slowdown as the whole process comes to an end. I think the Fed screwed up by allowing zero interest rates to go on too long. I think we are just beginning to pay the price for that. It would be nice to say that it would be great if the Fed got lucky. I've been around for 50 years and I've never seen the Fed get lucky. Those are pretty damning comments. And we talked last week, Byron, about the Fed is like they're just tinkering and micromanaging everything. It's like they have a fire in front of them. And as soon as the fire gets a little too big, they're dumping water on it. And as soon as it gets too small, they throw a ton of wood on it. And it's so reactionary and not letting the market play out. And look, there's a lot of free money in the system. We were on a text string yesterday about someone talking about that. And it's just like they can't stop giving it away with the federal government. And it's a problem. And that's why we're in the situation that we're in. I mean, it was too long in 2020. They were too slow to react. And now we're playing catch up and they still have this 2% inflation target. The reason inflation's up is because people have free money to spend money on. I mean, that's really what happened here.
Well, you're going to continue to see a very reactionary Fed because Jerome Powell refuses to have his legacy defined as the guy who couldn't tame inflation. And they're going to do it at all costs necessary. So every time they see bad economic data, like we've seen the last 3 or 4 weeks, you will see them ratchet up on the fight of inflation, and they went too far the other direction. I mean, that's what this billionaire investor Zell is saying. They went too far. Zell rather is saying they went too far the direction of giving people free money. They went with the pandemic hysteria, and they let politics drive the decisions way too far. And now they're going to have to go too far in the other direction to make sure that they win the war. And that's why you've seen the markets right now react. That's why we saw for the first time this week the 10-year treasury get up over 4% for the first time since early November. That's why we're back on a 7 handle on the 30-year, because the markets are saying, whoa, the Fed's going to react here in March. Okay. And Ivy Zellman always says, real estate economist, if you're not watching that 10-year, and especially now in 2023, where we have a volatile mess with the 10-year, you're going to be super undereducated on how the 30-year is reacting. I just heard, guys, from an executive from a very big real estate portal say to agents recently, hey, we're not in those big high interest rates. I mean, it was just like a couple days ago. Hey, we're not on those big high interest rates anymore that we saw last year, are we? And that's what the buyers need to know. And it's like, hello, that was 3 weeks ago. You could have said that. It doesn't work right now. It's not something that, and like somebody like Ivy Zellman, she's always historically said, I will just throw your ass out of my house if you can't speak about this stuff and you come in and try to pitch me a listing. I need to know as a home seller where the opportunities are going to be in the market. Who is going to be, we're at 7% in my price range. What's the type of buyer that's going to be out there looking today? Who is that? Can you identify that person for me? And then number two, can you identify how you're going to expose my property to more eyeballs than the other two people that I'm interviewing? That's the game, right? And the Fed, to your point, Tom, is going to try to screw up the game every single day, which means you're not going to have one listing script that works all year. It's going to be an evolving conversation as this market continues to be a little bit of a mess as we're bottoming out and we figure this thing out.
If you look at what the
No
Fed,
truer words.
I mean that's well said, and I talk about this every week. The CME group, they have the Fed target rate probability tool they have on their website. So just last week, Byron, we were at a 73% chance we were going to see a 25 basis point increase. That's now dropped to 69% this week, and it's a 30.6% chance we see a 50 basis point increase. I mean, and a month ago, there was a 0% chance that was going to happen. So as you see this meeting come up closer, and we've got 19 days until the next meeting, and with the language we saw from the meeting notes that they were worried about what's going to happen with residential and commercial properties, I wouldn't be surprised if the Fed goes 50 basis points at the next meeting. I mean, it seems more and more likely.
I think they will.
I mean, the data here indicates that. These guys study this more than I do, and that's something agents are going to have to deal with, and you've got to know how to handle it. And to your point, the 3-point listing plan is not going to work anymore. The sign in the yard, put it on the internet, and wait for somebody to show up. You've got to articulate value in, here's everything I'm going to do. Remember, you talked about the communication plan you would have people sign, Byron, on listing appointments. This is the world we live in, and you've got to be talking to people every day about what's going on and give them a real opinion, not, I don't know. I mean, that's just not going to cut it.
Yeah, the communication guarantee is a real separator. Here's something, Lisa, I'd love your opinion. I know that you're in a lockbox market, right?
Yep.
Let us know in the comments. Are you in a lockbox market? Yes or no? If you're an agent specifically, are you in what would be considered a lockbox market? How do you feel about this, Lisa? And this goes back to the conversation earlier on the pod about being in the arena, being willing to put a little bit more time on the road, okay? Being willing to buy a new set of tires this year in 2023. I don't know if tires are up. Maybe Tom can look up cost of tires. Factor that into your budget this year because you should be out there in the market. Here's where I'm going with this. If I'm in a lockbox community and I'm pitching a listing, I'm going to say to that seller, I'll be at the showing. And some people have this price point right now where it's like, I'll do it over $1 million or something like that. No, I'm talking about those median price point listings. Hey, we're in a lockbox community. The other two agents you're interviewing are going to be providing a lockbox, and they're going to be providing, showing time or whatever the showing app is in your particular market. And that's how they're going to coordinate showings. And that's normal in this market. And I'm going to provide a lockbox for the instances that I can't be here. But guess what? I'm going to be here selling your property, making sure that every buyer that comes through and every buyer agent who I have great relationships that comes through understands the nuances of this property. When we sign the listing, Tom Toole style, when we sign the listing and tap the table and tap the listing agreement, when we move forward tonight and sign the listing, I'm going to come back this weekend and I'm going to spend 3 to 4 hours at your house, really understanding what it's like to live here, like you have for the last 16 years, really understanding all of the nooks and the crannies and the nuances that make this home worth a little bit more than the other two homes that are on the market that we're going to be competing with. And I'm going to articulate that to every buyer, because what I know is the more buyers who fall in love with your property, the better the chance we're going to get at netting you the most money possible. And I'm willing to provide that service for you. The mid 2020 market to the mid 2022 market, slap a lockbox on and get the listing signed because they're interviewing one agent, is over. What is your separator? And actually being out there in the arena, selling the deal, meeting more agents that you don't, relationships, all these different things. There's so many layers of benefits to this. Is going to be what helps you sign more listings today.
100% agree. And I'm going to say not just selling the house, but same things that I spoke about that we're doing with our buyers, understanding what lenders can bring to the table and bringing that into your listing and presenting it to the buyers that come through the door. Because while we do it with our buyers, what I can't guarantee is that every buyer agent coming through the door is going to do the same things. And for the exact same reasons that you just said, if I can present a lender who can get them into the home now, get them a lower rate later, that buyer is going to be slightly more interested, especially if they were on the cusp of either A, being able to afford it without a 2-1 buy down, or B, scared that the rates are never going to go back down. And I 100% think that's our obligation.
How many times have you guys met a buyer on a listing that you've had in the past, and then all of a sudden you weren't trying to steal the client, but 2 or 3 years later, they reach out directly to you and say, "Hey, I remember you from showing me this property, and yeah, I ended up buying it, and now I'd love to, refer you a deal or work with you on another acquisition. I really, my agent's now out of the business, or, I just really would like to vibe with you." And if you're going to be in this business and you're a long-term thinker, 5-10 years down the road, meeting more people out there in the arena is a really smart strategy.
Absolutely.
So I love the differentiator, Byron. I personally, I wouldn't recommend you go show the house yourself. This is our first disagreement on the pod here. And
I love it. This is great.
But what you can do, and what I would do, because it's more scalable, is imagine before every showing, you email the brochure, you hit like, here's selling points, here's stuff you want to know. You don't have to go to the showing, but you've got to have systems in place that are going to be different. It's not scalable to show the listing. I mean, I've turned business down that way in these tough times. Go ahead.
But would you turn a listing down over that right now? This is where I'm going with this.
The average agent should not. The average agent should not.
Lisa just talked about 34%, inventory. What can you do every single day right now to put yourself in a better position to win the listing? Now, remember what I said at the appointment. I'm not going to not put a lockbox on, because that would be abnormal. And, if a tree falls in the middle of the road and I can't get to the property, right? If something happens and I can't get to the property, I'm going to need to give that lockbox over. But if I'm here at 70% of the time, that increases our chances 70%. I promise you, Tom, most agents are going to say what you're saying, and you're going to just stand out by providing this as another element of service. You'll stand out, and I'll beat you on the listing appointment
maybe
every time if I do that.
I agree with the standout. I think you got to pick the way you're going to stand out. That's not going to mess up the rest of your business. And that's more my point here. You want to be the differentiator. If you can't validate your points of difference at the appointment, you're cooked. You're done for. Someone else will beat you. And you can overcome being at the house or not if you've got other differentiators that are going to put more money in the seller's pocket or fundamentally increase their odds of getting the home sold. That's more my point here. If that's what you got to do, go do it. But have some differentiator. It doesn't necessarily have to be I'm going to be at all the showings.
Lisa, any final thoughts from you? I mean, are you going to come back to Knowledge Brokers? Are you going to remove yourself from our Three Families text chat after this? What are your final
Well, you
thoughts?
guys, in that text chat, like somebody's got to keep both of you candy asses in check. So I don't think you could afford for me to leave the text group. And if you'll have me back, I'm stoked to come back because I actually like a little bit of healthy debate here. I disagree with Tom Toole about emailing over extra shit. I don't open half my emails, and I know half my agents don't even open half their emails. So
yeah, I would say call that agent and
whatever.
If you're here's how you stand out at the listing appointment. Here's how another example would be you show them. I used to always show them the MLS. Okay. I would show them what's going on in real time at the dining room table. It was one of my, ways to, instead of bringing paper, I'd open up my computer and not everybody's comfortable with that. Maybe it's a printout, whatever, but I actually might even show them showing time. Hey, this is how agents actually schedule your property. It's on an app. And oftentimes they just have it set up as automatic approval. And guess what? Those agents you're interviewing, they don't ever have a conversation with any of the buyer agents coming through. And I'm going to have a conversation with every single one before I press approve. Okay. Now, and you guys may both disagree with this, but again, how are you changing your approach in 2023 to win more listings? And if it takes making a call to every single buyer agent that's showing and articulating that to the seller, that this is something that I do, and these are the bullet points that I can add to that, add to their experience verbally before we show the property, it makes a difference. I mean, we were talking about the boomers here earlier. Do boomers not resonate with a personal touch?
100%.
For sure.
So it's a different market. I would not have had this opinion or strategy rather in June of 2020, but it's March of 2023. And to win in March of 2023, for sure, it's going to take different activities. And Lisa, for sure, it's going to take making my calls, which I know we all got to jump on and get going to here very quickly. So Lisa, appreciate you coming on. Tom, final thoughts from you?
Go get that knowledge, understand the market, and remember, you're playing the long game here. This isn't going to be like it was. Apparently, there's a party at Lisa's office, and I think they're having.
Yeah, Lisa, put yourself on mute. Or you
I told you, I'm upset.
Put yourself on mute, or you're never coming back on. There it is. All right. Sorry about the background noise. Lisa is going to be quieter next week. It's going to be Lisa and Tom next week. I don't think I'm going to be able to be on because I'm going to be at Eric's wedding, unfortunately, to close out the week. But really appreciate everybody, all the feedback they're getting from this pod. Let us. Did I say that? Sorry, Eric. I don't think Eric can make it this long in Knowledge Brokers Podcast. If you're making it this long in Knowledge Brokers Podcast, we know that you're serious about your business. Let us know if you made it this far. Consider subscribing to the channel and let us know what you liked about this week, because Lisa and Tom will add more next week. Let's keep growing our knowledge. We need it in 23. Thank you, guys.